This is exactly what people said who lost money on silver during the 2000s run-up of the silver. People were frustrated, people were extremely angry that they purchased at the top. Later, after they call it a bubble, a lot of people actually said it's actually a scam. Read very carefully. Based on the market analysis, people who purchased at the absolute top of the silver at this time, around 2000s, they had to hold over 20 years just to break even last year. Pay very close attention. Based on market analysis from the era, people who bought at these particular prices were experiencing excessive frustration at the times of irrational sentiment-driven nature of the market rather than just supply issues. While some believed in a long-term value, this sounds familiar. A lot of people now in the comments, we're here for the long run. While some believe it's a long-term investment, others face losses from the rapid price crash. What about sentiment? Well, back then the sentiment was, of course, over the supply. Everyone was bullish. No one cared about the actual intrinsic value of the silver and long-term price action. Observers noted that in the early 2000s, like the dot-com bubble, silver price movements were driven heavily by investor feelings and speculative frothy sentiment. Same like now. People are buying because other people are buying. Unwarranted. I'm here to warn you, okay? It's not gonna be like the other time. Investors often found themselves in position where they had bought into a runaway speculative frenzy that was not supposed by fundamental supply changes. Guys, when there is no fundamental at the exit of anything that you're buying on the equity markets, on the precious metal market or crypto markets, the exit is usually always the same. People got rinsed. And in the case with silver, like I said, how would you feel if you have to wait 20 years, your money locked on losses just to break even, not to make money? I guarantee you there will be, or there had been people who last year just broke even, waiting this 20-year period, and they didn't even want to think, oh, it might go hard, I might actually make some money. No. Let me just sell. Let me just, forget about it. I've been waiting 20 years. I don't want to hear silver anymore, okay? Look at this. Volatility and the crashes. Even with the potential for long-term growth, something that a lot of people now are buying into, the main reason for it, those holding silver in the 2000s faced significant volatility, such as major, rapid, and historic crash. Of course, there was frustration with physical disconnect. Some investors, particularly when holding silver trust during the volatile times, expressed frustration regarding the disconnect between the paper silver prices and the actual physical supply of the silver, which is happening as well right now. If you go and look at the exchanges, buying the actual futures or actual silver on the equity markets versus holding the actual assets, physical gold and silver, have different prices, have different value, right? And this is the same frustration. Why? Because the game is always the same, but the newcomers don't know this, so they're gonna get rinsed again. Pay very close attention. In summary, those who lost money often cited an irrational bubble-like behavior of the market and high-risk speculative nature of trading silver during this period. Again, you need to understand what is happening by looking what actually happened, because the same people are trading the same stuff and they're buying into the same stuff by looking at hype, irrational thinking, sentiment, which is oversupply, which means that the sentiment is overtaking the supply, the actual fundamental value. If you're trading, you know that if you look at the RSI index, right, it shows you oversold, overbought, and you have the fair value, which is the fair market evaluation of the asset. People are not looking at any of these. People are just looking, okay, is it up? And people are always willing to buy when it's up. And most of them are willing to sell when it's red, which is completely opposite, right? It almost feels like you're willing to buy your home when your home, like, it's $150,000 more expensive than last month, right? But if your home that you're planning to buy is $150,000 lower, you're not interested in buying, because you were thinking, first of all, it might go lower, and second, you might be thinking, oh, it might actually not be a good deal. If the price decreases, if I buy it, it will go lower. So it's a two-way think about it, right? First of all, you want to go lower so you can buy it, but you don't want to go lower because it might actually be a bad deal and it will depreciate, or it might depreciate even lower after you purchase it. So it's crazy checkmate scenario. And of course, it all ends up with volatility, crash, and frustration. Same three scenarios. And this is not me making up anything. I just went on Google and I just typed, what did the people who lost money trading, holding silver in the crash of 2000 said about the crash? That's it. I just asked Google for summary. I'm not making up anything, okay? This is proven by the facts. As you can see over here, everything comes from a particular link with comments, summary, articles from 2000. And people got rinsed. Imagine what they came home, what they said to your wife, it's down. We put 100K, now it's 20K, it's 30K. I'm sorry, I apologize, right? They have no explanation. You know why they don't have explanation? Because they don't have reason to buy into it in the first place. When you have a thesis and when you have a sophisticated framework to define your thesis, right? Why you buy NVIDIA? You have a sophisticated explanation. NVIDIA supports the AI infrastructure, which AI infrastructure cannot exist without NVIDIA. Well, NVIDIA presents a bottleneck through the industry that is evolving and growing on the institutional or individual level. So this is how you build your thesis. This is how you understand the main reason why you buy into something. If you stop some of these precious metals bulls on the market and ask them, why did you buy? Now or before, most people have zero answer. Zero answer. They will most likely pull out their phone and they're going to show you some video or something, or someone that told them to do so. The question is, when everything crashes down, right? What they're going to say? Are they going to go again and back and look into this person, ask for a question, for advice? No. Because it is not bad to lose your money investing if you really put up the time and work and you predicted something is going to happen. You may be wrong, but you lost or you made money based on your own knowledge and expertise. It almost feels like an achievement because you put up the work, you test something with your own money. You don't use leverage, you don't use someone else's money, you don't use your friend's money, you don't listen to somebody else on the street. You just took your own money, did your own research and due diligence, and then you waited to see, is it gonna be a success or is it going to be a failure? This is how the man should supposed to approach everything that appears to be an opportunity, or it might end up being a trap.